what we want to do is give everybody an overview of the ABLE plan and really kind of highlight some of the most notable, applicable features that will apply to most of you. We recognize everybody's situation is different, everybody's financial situation is different, but I think after hearing this, you all will see some nuggets of how maybe this can indeed help you with your funds. Before I forget, we are, as any of you who are accustomed to Zoom meetings by now, and it looks like most of you have already muted yourselves. So throughout the presentation, we'll stop and ask if there are any questions, but by all means, if we're in the middle of discussing something and you have that question right then and there, just unmute yourself and we'll stop and take it. So I really want this to be a comfortable exchange. So, we have anybody else to put in? Okay. All right. So, what is ABLE? ABLE is actually an acronym, and it stands for Achieving a Better Life Experience. And Arkansas ABLE is, by definition, an affordable savings and investment plan that makes it possible for people with disabilities and their families to save and invest their money for expenses that are related to living with that disability. So for those of you who are familiar with the 529, it used to be called College Savings Plan, but it's broader than college now. So if you're familiar with the idea of a 529 plan, it's like that, but it's specifically tailored for people with disabilities. And the definition of qualified expenses is much broader than what you would find in a 529. So before we, like any good lecture, we have a brief history lesson here. So in '90, Congress passed the Americans with Disability Act, which I would imagine most of you are familiar with. And in 2014, it took a while, but Congress passed the ABLE Act, which allows people with disabilities to use tax advantage savings accounts. And a year later, in 2015, the Arkansas legislators passed the bill that brought the Arkansas ABLE Plan, or the ABLE Plan, to Arkansas. And then in 2017, the legislature passed the bill that put that under the administration of the state treasurer's office. So there are four kind of primary ways that we like to say ABLE makes your money work harder, which is really the basis. These four things are the basis of this presentation today. And number one, it's important, first and foremost, to point out that savings in an ABLE account are not counted in determining eligibility for any federal needs-based benefits. So if your account exceeds the threshold with regards to any of these benefits, it will not count against you in terms, they won't look at the fact that, you have $3,000 in an ABLE account. That will not kick you out. Number two, there is a range of investment options and checking account option. And I don't want the word investment to scare anybody. We were having this conversation the other day that sometimes that's one of those words that people equate with wealth, or, portfolio has to be wealth. It is not. An ABLE plan, and you'll see this a little bit later, you can open an ABLE account with as little as $25. And all we're saying with the investment options is you direct us how to invest that $25, how to invest that $50. So you'll see a little bit more later, but I just didn't want anybody to be put off by the idea of an investment. Third, that contributions to an ABLE account are tax deductible. And this is awesome for Arkansas state taxpayers. So if you file your taxes as a single person, you may deduct those any money you put into your ABLE account for that year up to $5,000 for single people may be deducted from your gross annual income. And for those of you who are married, you may deduct up to $10,000 in contributions. So that is a huge benefit for a number of reasons. And then to kind of complement that, any withdrawal, anytime you take money out of your ABLE account to pay for these disability-related expenses, you are not taxed on those withdrawals. So you'll see at the very bottom there, there's a little asterisk, and we'll talk about that in just a little bit. That applies to the supplemental, the SSI, sorry. Okay, so moving on, who is eligible to have an ABLE account? So eligible individuals must have a physical or a mental disability that is expected to last for at least a year or can unfortunately be terminal. The disability is included on the Social Security Administration's list of compassionate allowances, and the disability, or in some cases any blindness, whatever the disability is, had to have occurred before the age of 26. Now, I will point out in March of 2019, there was the ABLE Age Adjustment Act that was passed, that was introduced. And this is a bill that was introduced to raise that age limit from 26 to 46 to, among other things, take into account the post-traumatic stress syndrome from a number of vets, returning vets. So that legislation has not passed yet. We are definitely keeping an eye on that, but that would open up the plan to many, many more people as well if that did happen. So what can I pay for with my ABLE account? So we define a qualified disability expense as any expense incurred as a result of living with the disability and is intended to improve the quality of life. So this includes, but is not limited to, education, medical expenses, housing, assistive technology, possibly even a funeral expense if that should be necessary. So basically any expense related to improving your or the loved one's quality of life. And we purposely chose, if you'll see there on the PowerPoint, the image of the woman with the dog. In a case like that, even the expenses related to the care and training of the dog would be covered. So, you know, we think of course, the wheelchair and maybe a hearing aid and glasses, but we like this illustration because it, again, follows that, falls under the category of this is something that would, you know, increase or enhance our quality of life. And all the, there's a much more exhaustive list of everything that's covered on the ABLE website. And so we'll have a link to that, and you may have even already seen that website, but we have that on the website. So I mentioned a little bit before that, well, I may not have mentioned this, that just for clarification, that ABLE funds are intended to supplement, to add to, not replace, the benefits provided by private insurance, Medicaid, SSI, or other resources. There are some exceptions that apply when an account exceeds $100,000. So with regards to supplemental security income, if the ABLE account should reach $100,000, your SSI payments will be temporarily suspended, not terminated, but temporarily suspended until that account comes back down to that 100,000 threshold. Great problem to have. Whereas with Medicaid, if that should happen, the benefits are not suspended. And we want to point out that legislation did go into effect in 2019 that prohibits any state agency from seeking retribution from the ABLE account if the deceased should become if the beneficiary should pass away. So if you have funds in that account, they can't come back and ask you to reimburse them for what they've already paid out. So I know I've covered a lot. I'm going to take a little breather here, get a sip of water, and if anybody has any questions at this time, feel free to unmute and we'll get them answered. Do I see any questions?
I have a question about the tax deductible part. Does that apply to anybody that wants to contribute to an ABLE account for a person with special needs? Like it could be a grandmother or a grandfather, or
yes,
anybody can take advantage of tax deductible?
Yes, so, and we'll flesh that out here in just a second, but I'm so glad you brought that up. So for example, you know, it stands to reason that for your own child, obviously, if you put money into the account, you can claim that on your taxes, but you brought up the example of a grandmother or a family friend. So if I'm friends with you and as for a birthday gift or something, I want to put money in your daughter or your son's ABLE account, I as well can claim whatever that contribution was. So it doesn't go just for the account family, it also goes for anybody who contributes to the account.
Okay, and is that just tax deductible for the state of Arkansas, or is that federal too?
Just for state.
Just for state, okay.
Yes.
Okay, thank you.
The same limits apply, you know, so if I'm feeling extra generous and want to make a, you know, $6,000 donation, but I file single, I can only quote claim 5,000.
Okay.
Any other questions? All right. Well, next we're going to pivot a little bit and get into just a little bit of the weeds to talk about the different account types. And this is one of the things that I personally, and I think you all will agree, is really nice about the plan, is that it recognizes that people with disabilities may still have the ability to manage their own funds. And so there are 3 different account types that may be opened. And just to clarify, and I mentioned this earlier, the good news is that an account may be opened for as little as $25. So I'm going to ask Chris to just kind of go through the different account types here and explain what the difference is with each one.
Yeah, so like Fran mentioned, we tried to make the ABLE plan as flexible as possible for a variety of different people. So a parent or an authorized owner can open up an account on somebody's behalf. They can open up an account themselves. So the 3 main categorizations are self-owned account for individuals who are able to act on their own behalf. Parent guardian, this is a big one. Obviously, the parent or guardian would open the account on behalf of the minor. And then lastly, the authorized individual. And this one is for individuals who are unable to act on their own behalf, but they have legal documentation showing who is in charge of their financial well-being, and that person can open up an account. Regardless of which account type it is, federally, they mandated that the account owner is always going to be the same as the beneficiary. With those different account types, it's just another person that's allowed to act on the account.
And this is important too to point out. So if you are in a situation, we've had somebody talk to us about the third-party trust.
Yep.
And there was another, but the differentiation is that the ABLE account is in the name of the beneficiary. So from a tax perspective, it won't compete with some of the other benefit programs that are more like tied back to the special needs trust, which is usually offered through an employer for the benefit of the employee. Well, that employee's taxes, that's all attributed to them, whereas the ABLE account is in the name of the individual beneficiary.
And then moving on to the state tax advantages, like Fran mentioned earlier, Arkansas taxpayers can deduct up to $5,000 for single filers or $10,000 based on their ABLE contributions to their state income taxes. And for residents of Arkansas, the withdrawals are going to always be tax-free if used to pay for a qualified disability expense, meaning if you need to pull out $5,000 from your ABLE account for assistive technology or a wheelchair, you're not going to pay any taxes or penalties on getting that money out. Now, if you take that money out to go to the casino, that's an unqualified withdrawal, and you would have to pay taxes and penalties on the earnings portion. Or, worst comes to worst, you do just need to take out all the money from your ABLE account. That would be an unqualified withdrawal, but again, you're only going to be paying taxes and penalties on the earnings. Everything that you put in yourself, you're going to get back. And then also, Thomas brought to my attention something that I'm sure the majority of you are probably already aware of, but there is still a standing $500 deduction on qualified disability through the state of Arkansas itself. And I can make it a point whenever I send out an email to mention those forms.
Which I think they're available on Deanne's site.
Yes, and
Yeah.
Deanne, they are available on your site, and I'm sure you knew that.
Yeah, and I'll go ahead and mention those forms. That's the AR 1000RC5 form. That's for the $500 credit. And then the other form is the AR 1000DC, which is an additional $500 deduction. So, and those forms are on the website, Arkansas Down Syndrome website, but also on the Facebook group. Someone brought that up this morning, and I spoke with Deanne about it because I didn't know about that, and we'll be using that for Cecilia this year.
And to clarify too, something Chris said, that I've had this question more so with the 529 than ABLE, but the money always stays with you. I mean, it's not, the money doesn't like go into some magic pot. I mean, if in 10 years there's a reason you need to withdraw all the funds, and it's not, it's more out of necessity than a qualified expense, it's still your money. I mean, the difference is if it's for a qualified expense, obviously you're not going to be paying the taxes. But if you need that money and the taxes are just part of the way of getting it, then it's still your money. You just have to, unfortunately, pay a little bit of a penalty on that. So the money will always be yours. Okay. So getting back to when I mentioned earlier, don't let the word investment, be a red flag word at all. If you do open an Arkansas ABLE account, you will be prompted to decide what kind of account you want your money to go into. So this is, again, where I really feel like the ABLE plan recognizes that people come into this from all different walks of life, all different socioeconomic, backgrounds, and children who are 2 versus children who are 15. I mean, it recognizes all those different things that will go into your decision making. So you will have the option to invest your money in 6 different account types, ranging from aggressive to conservative. And if you're looking at the screen, I want to point your direction to the bottom two account types. They have a cash option. So if you wanted, let's say you're putting in a certain amount each month, but you wanted like either 25% or 60% of that to remain something that you could withdraw on a regular basis for housing or recurring, to pay for assistance. Maybe somebody comes to your home every day and you said there's a regular paycheck that comes out. You can put that money, and again, think back to, you get the benefit of it's considered a contribution. So the rest of it can be sitting there earning money in the on the investment side, but we're still, you still have access to it from a traditional cash. And so you will be issued checks or even a debit card for if you choose one of those two options. Now, before we get off that, so in terms of the cost, and we're going to talk about the cost of having an ABLE account, but I want to point out the second bullet there. So depending on what the balance is and depending on which investment option you choose, your fees will include anywhere from 0.34% to 0.38% of that amount. And I think if you care to research that and look at other plans, especially ones that are offered through maybe some third-party investment houses, that's extremely low for all the different plans that are out there. All right, so now we're going to talk about making those contributions and finish talking about the fees that I just referenced. Before I do that, I do want to stop. Are there any questions that maybe I might not have fleshed out enough or you need clarification on? Okay, anybody? I think we're good. All right, so who, and you had I'm trying to remember your name, I can't see it from here, but you had the question earlier about, can anybody contribute? And so simply put, yes, anyone may contribute to the ABLE account. The beneficiary himself or herself, family members, friends, even an employer. We get into a little more detail there that contributions may even include Social Security payments, earnings from work, rollovers from another family member's ABLE account. And what's really nice, when an ABLE account is opened, whoever opens the account is given what's called a U-gift code. So it's like the letter U and then the word gift. That is a unique code that you may then forward to family and friends and say, hey, I just opened this account for Cecilia, and just heads up, maybe next birthday or holiday, if you'd like to make a contribution to it. And then the recipient of that email from Thomas can just click on it and it will take you right into that person's account, so you may make a donation or a contribution. So it's kind of giving you the link, so to speak, to allow others to make and that code stays with you throughout the course of the account. It does not change like on any given day. So the second item up there is the limitations. The total annual contribution to any one account may not exceed $15,000. Now, there was, in 2017, Congress did pass the Able to Work provision, and this recognizes that if you are in a situation where you are earning an income, you do not need to adhere to that $15,000 cap. So if it's like a young adult or even an adult who is able to maintain a job, they don't need to be concerned about that $15,000 threshold. And then the third item, the account balance cannot exceed the state limit for the 529 accounts. So right now, the cap for lifetime account balance is $366,000. Okay.
Hello, I have a question. I have a son who has a 529 plan, and if he does not go to college, could he put that money in his ABLE account?
We've had this question before.
And
So it's the same son, you have a 529 for him, and you're thinking about moving it to an ABLE plan? If he doesn't go to college?
Could he, yes, could he do that if he decides not to go to college?
Yes. Can't they?
Yeah, they can roll over funds from a 529 account into an ABLE account. Just for some reason, you can't go the other way.
Right.
You can't roll funds from an ABLE into a 529.
And
Okay.
I don't know what depending on what your situation is, if the money were to be moved into an ABLE account, you would have more flexibility in terms of what with the 529, your qualified expenses are typically room, board, tuition, but with the ABLE plan, you may still take advantage of that, but if your son required anything that we mentioned earlier, the funds from the ABLE account could be used for that as well. So just something you might want to discuss with, your tax person or just kind of weighing the
$6,500 in there. So he could use it for college, or he could use it for he has diabetes, type 1 diabetes expenses.
So I think he could use it for medicine and.
Absolutely.
Oh, excellent. Thank you so much.
And Fran, we have a question through the
Oh, okay.
chat.
I couldn't see it.
And-
We have a question through the chat. Do you want to read it? What?
Yep.
Hold on.
Get that back.
You might be able to see us, but we just lost everybody. Hold on.
Give us 1 second.
There we are.
Okay.
Okay.
So the question was, would a non-revocable burial
They may
policy
not be able to
be
see it.
something that would be tax deferred if money was taken from the ABLE account for that purpose?
And the answer to that question is yes. So, and just a little bit of background too, I used to be in the funeral business for 10 plus years. So what I would suggest doing on that is whatever the monies you would have in the ABLE account, withdraw that and then pay the funeral home or whoever you're doing that through with those monies. And that would be a qualified expense to the ABLE and to the funeral home. Does that make sense? I think it's Stacy. I guess.
And we'll have, yes, she said yes.
Okay, thank you, Stacy. Yes, that would be a qualified expense. So.
And our information will be available at the end of this. So if later on today you have any, or whenever you have any other questions that come up, we're very accessible. So specifically, the cost of having an ABLE account that is not dependent on anything, with how much is in there. Each account is charged a maintenance fee of $15 a quarter. However, if you're an Arkansas resident and you opt for electronic delivery of statements versus the good old-fashioned snail mail and paper, those fees combined take off $5. So now it would be $10 a quarter or $40 annually to have the ABLE account. Oh, did she have a follow-up question?
Yeah.
I'm sorry.
She did. Stacy, from my understanding, if you use that money for a non-revocable, then you will not be able to revert that back to cash. So, yeah, I think the answer to your question is yes. It wouldn't hurt to double check with your pre-arrangement person at the funeral home that you choose, just confirm that. But at least on our end, using ABLE to purchase that policy is a qualified expense.
So we're at the end of the presentation with the highlights of what it is and what it may be used for and how much an ABLE account costs. Again, just to reiterate, an account may be open for as little as $25. And if you are interested in opening the account, we highly recommend that you go ahead and write down this information or keep this PowerPoint. I believe Deanne's going to make it available later. But the website is ar.savewithable.com, and be sure if you're doing any kind of a search or a Google, make sure you look at that address right, because there are some cases where if you type in ABLE account, it's going to take you to another state, and you may sign up and not even realize you're signing up for the wrong state. So I highly recommend you just make a note of the arkansasavewithable.com. And then there's the 800 number, or our local number here, the 501, if you have any questions, or if you prefer to email us at the ar.clientservice@savewithable.com. And the woman who had the 529 and wanted to convert it, or is considering converting it to the ABLE plan, Chris, if she decided to do that, is there an opportunity for her to indicate, or maybe like, would she need to do something a little different than just going on the regular website?
I would probably call the 800 number and talk through them to make that happen when you.
Yeah, so I mean, you can go online, and that is a form of contribution you can make. I believe it's titled something along the lines of rollover under contribution section, and you would just plug in your 529 account number and then your ABLE account number and how much you're wanting to transfer. Or, like Thomas said, you can call that 800 number and they can guide you through the process exactly step by step.
Okay, I will use Edward Jones. Would it be better to have my investment broker do it for us?
Yeah, so if you're going through an advisor sold plan, then yeah, you would need to, contact them and tell them what you're wanting to do, and they would guide you through the rest.
Excellent. Okay, thank you so much.
You're welcome.
I have a question about closing your account. Is that an easy thing to do? And what happens to the funds when the person with the disability passes away?
Yeah, so go ahead.
No, you go ahead.
Closing an account is easy, just as easy as opening. You got to verify your information, saying you are who you're claiming to be. And then as far as what would happen to the funds inside of an ABLE account upon the death of the beneficiary, as long as there's an authorized person on that account that we can talk with, make sure that that person knows that you have an ABLE account. And so when they contact the office, as long as they're, an authorized person to speak to, we can give them the instructions on either getting that money out or transferring it to somebody else who's also qualified to have an ABLE account.
So if there's a sibling or something.
Exactly.
Okay, thank you.
These are very good questions.
And folks, I'm just going to go ahead and tell you sort of what sort of what me and my family are doing. With Cecilia, of course, our story is unique, just like everyone else's here. But we're blessed enough to be able to adopt Cecilia in a few months. And once that occurs, once all the legal paperwork is done, then and she's officially ours, we'll be opening up an Arkansas Able account. And currently we get board payments from the state because she's a foster child, but we do plan on applying for SSI. And if any of you do have SSI payments coming to you, you can have those directly put into an Able account. That's personally our finance goal for her, is to use Able as more of a savings, a little bit of an investment tool, so that we can save for her future. Because as many of y'all know, you don't know how things are going to turn out when they become an adult. Really, our goal right now is to plan for her to stay with us forever. If we're blessed enough that she is high functioning and she can live in her own home one day and have a job, that's going to be what we'll use that for. You know, we plan on using this for housing for her, any other kind of expenses. And like Chris said, we're not going to take her to the casino over in Pine Bluff. But you know, it's that part of where it says health and wellness. You know, if she wants to have a gym membership when she becomes older, for her health reasons, that's a qualified expense. Personally, we're going to try to build her a little tiny home that's, you know, on our property. That way she has that independence, but can also stay close enough to us if she needs us. That's our goal. Things can change, but with this Arkansas Able account, we have a little bit of security for that future.
She's a lucky girl.
We're a lucky family. Her little smile just melts my heart every morning. And so she wakes up happy every day. I wish I could say the same for myself. But she is a huge blessing, and we are getting to adopt her brother too, who is a little bit over a year older than him too. So it's a sibling group technically, but we're just excited to have both of them as part of our family. And like Chris said, we now have 3 kids. I have a 10-year-old daughter who absolutely adores Cecilia. So, and I know y'all can check on a little Facebook group. We'll be at the zoo on Sunday if y'all want to come hang out with us, because I think several other families are joining us too around 2 o'clock. But if y'all ever need just a quick question answered, you can find me or my bride, Alexis, on Facebook there on that group. Be happy to answer any questions for you if you can't get us during the weekend or something.
You see why I love working with these guys. I mean, they're just awesome. They're awesome.
This is Stacy, and I'm one of the nurse managers for Title V Children with Special Health Care Needs. And y'all mentioned about those disability tax forms, and we try to make sure and let our families know about those. But those haven't come out for this year yet, correct? The new forms for 2021 have not come out yet, correct?
I do not think so. I think the ones that I was looking at had 2020 on them.
I think they come out in a couple more weeks. I was just making sure that I didn't think they had come out yet. Okay, thank you.
Yes, ma'am. Thank you.
All right. Well, like I said, we if anybody has any questions,
Fran,
yes.
have we talked about where they can go open the account? I know I had to pop off here a couple times.
Yes.
How they actually go through the motions.
It was the very last page of the PowerPoint.
Okay.
And it's the website. In fact, it's the same address. If you all received the flyer or saw it on the Facebook page, it's the address that begins with capital A, capital R. So it's ar.savewithable.com. So ar.savewithable.com. And Deanne, we can talk after this about maybe adding us to your resource page with the link. And
you are on our resource page. You're under the Arkansas tab.
Oh, okay, wonderful. So that's another way that folks who are on the call today can find it. Thank you.
And when the forms come out for 2020, no, these forms on there are 2019. But when we get the new forms, we'll upload those on the resource page for the tax credits.
Okay. All right. Well, thank you all so much for your time today. And please let us know if you have any follow-up questions, and tell your friends about us. And if there's anybody, any other groups that you think might benefit from hearing this message, by all means, let us know that as well.
I'll send an email out if I'm savvy enough to do that, at least where they can find the recording. And if not, where it is, maybe I can send the recording. So at least somehow they'll know where to reach it in case they want their spouse or another family member to watch.
Wonderful. Thank you for doing that.
Sure.
All right.
Thank you guys for doing this. I'm so glad we had everybody join us today.
Yes.
Yeah.
All right. Okay. Bye-bye. Thank you all.
All right. Thank you.